Hey everybody, welcome back. A lot to go over because tomorrow is the end of the year. We're going to talk a little bit about what to expect there. But overall, we should talk about some of the macro and fundamentals that happened today, specifically what's going on with the home builders. There's a little confusion out there, and I think we can clear it up really quickly, and we'll use the stool to do it. But if we get into some of these levels, we're going to remove this. We're going to remove my little alert there. We can just see that you're basically flat. We're just going to leave this here, 48.6125. And this is really where we're trying to get to, that 5,000 level. And what I want to spend some time on is what you should be focused on tomorrow and how you can best be served by this video and how I can add value going into tomorrow. That's really the only thing that I can offer right now. Saturday's video is going to talk about next week in 2024. I need to really see what happens tomorrow. I have that already mapped out. You're going to want to watch Saturday's video. It's going to be setting us up for 2024. Tonight's video, what I want to do is just think about it. It's like, okay, how can you add the most value? Just really walk through what we need to go through tomorrow, talk about max pain, talk about what happened today and what you should be focused on. And so we're just going to dive right into it, specifically some of the econ stuff out there. So we're going to just start with the macro. Now, today we had some macro data come out, and let's just be really clear. No one cares about jobless claims, initial jobless claims. You know when they're going to care? 250, 275. Until then, no one cares. All right, so they're not going to pay attention to it. It's not relevant. So then we get into pending home sales, and we got to get into the T-bill auctions. I'm not going to talk about the 1 o'clock auctions, although I do want to show you something there as well. But this was pretty interesting, and I'm trying to figure out what they were thinking. But we're going to get into that. So pending home sales were down. This is the previous. This was consensus. This is where you came in. Year over year was down. This was lower than anticipated across the board. Now we should talk about why, but before we do that, let's just pay attention to what happened at 11:30. 526, and then this auction was 532, 527, 528. That's not really ideal. Okay? It's not ideal. So maybe people are starting to have some second thoughts about what's going on out there in regards to rates. And what they're saying is you're going to have to give us more yield right now than you've given us in the past. And we did see that today with the 10-year ticking up, but that got blown off. But there's a couple other things that got blown off as well. Now, this is pending home sales. And what we're going to focus on is the following. We're just going to look at these dates. Here's 09, and here's where you are on pending home sales. Here's the pandemic. You're back to pandemic levels. And the question is, why are you here and how long are you going to stay here? So let's just deal with what pending home sales really shows. It shows the previous data. It does not show what's taking place right now. It certainly does not show where mortgage rates are right now. It takes the past month's data. It's not going forward. So there's a couple things to understand about that. Do you see some kind of rebound in this data? I'm not saying we're getting back up to there, but I think you can get to some kind of median. Do you see that coming into play as rates start to rise, right? Or as mortgage rates start to drop, rather. But do we see this start to happen as people can get a little bit lower payments? I think this happens, and what I'm going to say is that you might start to see more supply come out there because people are going to want to start moving again if they can. A lot of people are I'm going to say trapped, but they have that 3% mortgage. They really don't want to go anywhere. But you can see regional variations and who got hit. The South down 6.5%. 6.4% in the Northeast from last year. And you can see where people are down and where they're not really down a lot from last year was really the Midwest. And this guy comes out with a little statement, NAR's chief economist Lawrence, although declining mortgage rates did not induce more home buyers to submit formal contracts in November, it has sparked a surge in interest as evidenced by higher number of lockbox openings. So, yep, you're going to start looking, you're going to start shopping, but let's be a little realistic about this, all right? If you know that rates are going to come down and you just went through the single largest rate move that we've had in U.S. history, and let me show you this. Now, what I'm going to show you here is Fed funds rate. Fed funds rate is a really interesting way of me just to showing you the mortgage rate because it's all tied, right? Everything's tied together. So what we're going to look at is we're just going to go from 93 here. And I think this is pretty interesting for us to just focus on to here, okay? And that's going to give you that 10-year mark. All right, and let me just pull this here. So just so we're clear on where you're at, right? You're at a level that you haven't been since 94, 95, and look at the trajectory of that you have not seen since when? When was the last time you had anywhere near a trajectory like that, okay? It was back here with Volcker, and then what happened, right? And that really wasn't the best time to buy a house at that point, to be quite honest with you. But Everybody kind of knows that, right? All right, so it's not the best time. So your buddies were getting 3% mortgages. You're now getting 7. So you're looking at this and going, I'll wait for mortgages to come down. Have they even started lowering interest rates yet? Has that even started happening where they're lowering interest rates? No. So when they start lowering interest rates, people know that the mortgages are going to drop. So if you knew the mortgages were going to drop, would you be in a hurry? You probably wouldn't be in a hurry. You would probably just spend a little time and let things settle down. You might start looking. Let's see what's out there. Spring season's coming. Then maybe we'll talk about it, right? That's basically the seasons and how it goes. All right. So I don't think they're going to be in a huge hurry. That's my personal opinion. Now, let's take a look at what happened to the home builders today. And here we are again with our stool. Got that stool everywhere, doesn't he? And let's drop this down. And what did you see happen today? Did we fall off a cliff? No, we did not fall off a cliff. All right, let's go take a look here and see what the home builders did at that particular time. So here we are, 9:30 opens. Data comes out at 10 o'clock. Did we fall off a cliff? No, it didn't. People will say, oh, well, that's because it's late volume day. No, certain stocks got absolutely hammered today. We're going to go through a couple of them. But I think this is pretty interesting, isn't it? We really did not see anything affect us here. So I wanted to get this one point across. We're going to get more into this on Saturday and what to do about it. But I wanted to get this one point across where no one's looking backwards, right? There's a reason the rear view mirror is much smaller than the front mirror, isn't there, right? The windshield is much bigger. They're looking at going forward. Got it? So if we understand that and we get that analogy, hopefully, what I would say is, why would we care about this? Well, it's a great talking point. It's going to make people nervous. The only thing I would be concerned about that did raise a little bit of concern today was the fact that they went out on auction and they paid and they got a little more yield than I thought they were going to get on the bond. And I think that affected us today. At the same point, you cannot expect to go from here all the way down to here and have a 24% rise in the 10-year and not have some kind of pullback. So apparently we're going to have some kind of pullback, and here it is. It is what it is. How much damage was done today? Not really much, was there? Really wasn't a lot of damage. What happened to the NASDAQ today? Up 7 basis points. ES up 7 basis points. IWM or the Russell up 3 basis points. So not exactly falling off a cliff. You take a look at the dollar today, sold down and then reversed. All right, so we didn't break parity today. Let's give it a week. Let me know what happens next week. But you look at your level right here, and you came right to a support line. Okay, that's not the end of the world either, is it? So what really happened today that was earth-shattering or things that we need to pay attention to? Not a whole heck of a lot, guys, that we're dealing with the home builders. Right? You're still setting up here pretty nicely on the home builder. That's now XLRA. Remember, we were going to lose every single piece of office real estate. It was going to be the greatest correction ever in the history of office space. And no one was ever going to go back to New York. And SLG's at 52-week highs. Okay? Do your own research, guys. That's all I can tell you. Do your own research. These are layup trades. This was trading under book value when you were here. It was literally trading at 50 cents on the dollar. Right? And these things, in my opinion, are just getting started. I'm showing you what happened today on data that came out that is supposedly going to be horrible for real estate. And it's not even moving them. They're not even moving. Look at VNO. Look at SLG. Look at these names. Look at the malls. I don't know who's going to the mall, but look at the malls and how the malls are breaking out. So then this boils down to, how do you position yourself for tomorrow and what should you be focused on tomorrow? I would be focused on the exact opposite of what happened today. And what do I mean by that? So let's say Tesla, for example. Tesla was one today. The candidly disclosure today, I took a position at the end of the day. When it broke down, there was a level, and I can show you exactly where and why. But for our purposes, once we got to this level, it was pretty clear to me that you had a ton of support in here, but I can walk through this on Saturday if it's of interest, but it was pretty clear what was happening here. Now, you reversed. It's a pretty nasty day, right? And that's what's going to happen here. You're not going to have a lot of buyers on days like today. People are just going to step away. Nobody wants to be a hero and ruin their year, especially the larger funds. Just lock it in, come back next year and fight. You might want to watch this tomorrow. This is classic end of the year kind of nonsense where people look at this and say, oh, well, surely we're going to go lower. And then you see a rally in it tomorrow as people get squeezed. And what I would tend to do is I would want to see where the market makers are. So what I would do is I would go to this website, because this is free. And this is something I told people about before, maxpayne.com. I would go there because tomorrow is the last option X of what? 23. So you're going to have a lot of maneuvering tomorrow. This will show you the open interest. They will show you exactly where Max Payne is, and this is where Max Payne is at the time of filming this, all right? It will show us your highest strike, Highest call with open interest, right? Shows you right there, 262. Highest put open interest strike shows you exactly where you're at. Call amount, put amount, right? Total call, open interest amount, total put amount. Got it? So it walks you through the put call ratio, walks you through everything that you need right there. What we're going to focus on is just, you're going to want to pay attention to 55 because that's got a really good chance of them coming there tomorrow. And they're telling you where you are right now. It's up about $1.50 after hours. We'll see how it opens. You never know how this stuff plays out tomorrow, but I would be looking at max pain. Now, if you just take a look at where you're at, open interest chart, and you can see pretty clearly that the puts right there are around 260. So you have to think at some point, and this is how I always look at this stuff, do you think that the option market maker really wants to pay out these puts? Do you really think that they're going to want to pay those out that are sitting up there? Probably not, right? So if they have the ability to kind of play around with that, come back up there and make these puts worthless and scare people out of them a little bit, I know, surprise, surprise, but they do things like that, guys. And so if they come up this way, and I'm trying not to laugh at how naive some people are, but if you see this up here, there's a pretty good chance of something like that happening, right? Maybe that's 55, 60, it looks like. And then you can see right here. So they wouldn't mind making your stuff go worthless, right? So that they don't have to write a check. Something to think about tomorrow. You can run this on every single stock. I'm not going to run them on all of them tonight. I'm going to keep this one short and to the point. I just felt like pending sales was something we should go over. We're going to go over smart money, dumb money this Saturday, but I really wanted to just hammer this point home. Go to this website tonight, guys, or tomorrow you can use it. It's free. I have no affiliation with them whatsoever, but this is a great way for you to get free data. And this will show you the volume. And it'll show you the maturity volume and when it was created at this time. And it'll show you real clear what they were doing, where they were buying the 250s, where they're at, right? Where the volume spikes are based upon the volume chart. This is very helpful tomorrow when you're trading, and I would use this tomorrow to go look at names. A couple other things I would be aware of. When you go into the end of the year, you should be looking at the worst performing names. We'll go through a few of those on Saturday. You should look for the worst performing names of 2023 and the best performing names of 2023. So one name that I'm building a position in, and I don't mind telling people, is this IEP going into next year, able to get the dividend, paying $1.25. The guy's buying his own stock in the open market. You might want to start taking a look at this. I'm taking a look at it. You do what you want with that. But to me, this makes a lot of sense. And it's a pretty good dividend stock, but the amount of people that have taken tax losses in this that are going to want to buy and take a chance that this guy continues to pay that $1.25 dividend next year is probably pretty good. But there are several names out there like this that you're going to want to pay attention to, and sectors that you're going to want to pay attention to. Another sector that you might want to really pay attention to that has gotten completely decimated, you might want to pay attention to the solar sector. That would be another one. I'm going to get into this in great detail on Saturday, but for now, for time's sake, I think you should be looking at the solar sector and see how that's going. What would you take capital gains in? What were you up a lot in this year, right? NVIDIA's up a lot. So what names are up a lot this year that you might want to take a profit in that you're going to take in January? And you'd start going through those lists. What was one of the best performing sectors out there? Semiconductors did pretty good this year. So you want to realize that next year in the first 5 days, what they do is they lock in those capital gains. And so I would take a look at those and you would start getting a sense of what's going to happen out there and go from there. And I just want to go through something that I thought was pretty funny today. We talked about this in the public call, and I stated that off the open, I would trade this and have a profit off of this trade right off the rip because I thought it was ridiculous how much they were bidding it down. And this played out absolutely perfectly today. I may play the trade for you later this maybe on Saturday I'll do it, but it just was a very simple 1 minute or broke down, flipped, and then we went and did okay with it. I tried to actually short it a couple times in here. I did once or twice and pull something out of it, but this was just really nonsense. I even tried to buy the breakout on the way back up and it just failed again. What you're noticing with a lot of these names is the previous day VWAPs. Those previous day VWAPs were just respected. And basically what you're just seeing is the people that bought the day before that were all giddy counting their profits. They just got blown out. And so when they got blown out, that was pretty much it. So something to consider and something to think about. And I would watch for this kind of stuff tomorrow as well. You might want to look at previous day VWAPs, but understand that you're going to see some positioning and jockeying. And that's where my head would be. Another one that I'm going to go through, and I'll be more detailed on Saturday. But again, for time's sake, I'm trying to keep this one really short and hyper-focused. I would look at this FNGD. This is a 3x inverse levered. There is nothing technical about this whatsoever that would say that you should go anywhere near it. But that said, if you were going to go into next year and you think that things might be a little weak, you might want to look at things that might increase the volatility. You might want to go and take a look at UVXY. There might be things like this that look like absolute dumpster fires that might not look like dumpster fires Wednesday, Thursday, or Friday if those tax gains, and you want to lock them in, if that tends to happen. And it usually does tend to happen. If you go back and take a look, I'm going to spend one more second on this because I think this is pertinent. If you go back and take a look here in 22, and you come here and you take a look at December and how December in here was just straight selling because everybody was down and everything. So you just had all the tax selling. And then what happened in January, you bounced. Well, you have the exact opposite happening this year. And I think that's a very important distinction that you need to make. And I think you need to be aware of it. That's it.